happy first Friday of 2023. What a better way than to spend it with CCBuRN. Hello, my name is Nicole Sullivan, but you may call me Nikki. I'm a reverse mortgage advisor with the Sullivan Group and with Cross Country Mortgage. I grew up in Fresno, California, went to school at Chico State, graduated with a major in finance, and then I went to work in the financial services industry for about 10 years. Married my college sweetheart, Casey. We've been married for 25 years. We have 3 children, Megan who's 21, Emma 19, and Colin who's 16. I stayed home for 18 years to take care of our babies. I decided it was time to get back into work, so I used my financial planning background and my husband's love of lending and got into reverse mortgages, and I've been doing that for the past 4 years. Some fun facts about me is I swim every morning with the Walnut Creek Masters swim team at 5:30 in the morning, including today, and I'm learning how to play the guitar. So let's see, where's my timer? Oh, thank you. Okay. So today, guess what? We're going to learn about reverse mortgages. So sometimes you hear the word HECM, or home equity conversion mortgage. That's one way that we talk about reverse mortgages. I like to say the word reverse mortgage, because that also includes the jumbo and the proprietary products. I like to look at reverse mortgages as a way to rethink your retirement planning. Wrong way. And that's me. So, first off, you're going to notice the crazy fonts up here. That was just a little problem coming from marketing, but maybe I should be using Doug or our team instead of Cross Country Mortgage. So this is the normal misconceptions of reverse mortgages. The first thing that you hear when you say the word reverse mortgage is, the lender is going to own my house. That is not true, because guess what? It's just a loan. That's why I say that every single week, because that's the first thing that you will hear when you say the word reverse mortgage. The second misconception is that the home must be free and clear. Also, the loan proceeds are taxed. That's not true. They come out tax-free. Borrowers are restricted in the way they use the proceeds, and this is only for low-income borrowers. No, actually, this is for people that have planned their finances correctly. Why take out a reverse mortgage? So you can have extra cash on hand. You can purchase the right size house. You can eliminate your monthly mortgage payments, because this loan you don't actually have to make payments on. And you can reduce your sequence of return risk, and that is for all the financial planners in this room. Most people don't understand what that means. Retirement planning. You can defer your Social Security, so you can wait on taking your Social Security payments with the reverse. You can pay for your long-term health care. You can pay for your providers to come into your house with a reverse mortgage. Also, you can age in place, and again, you can reduce your risk of your portfolio by using it in conjunction with a reverse mortgage. Who's eligible? Well, for a HECM, you have to be 62. If you're 55, I also have a product for you, so that's where we start with the reverse mortgages. You have to live in your house at least 6 months plus 1 day out of the year. You have to be able to pay off your existing mortgage with the proceeds. This is for single family home, 2-unit, owner occupied, townhomes, FHA condo that are approved, and manufactured home. And you must pass a financial assessment. So what does the financial assessment really mean when it comes to reverse mortgages? It's a little different qualification process that we go through. So when you go see Ben, you have to be qualified to actually make that mortgage payment. When you do a reverse mortgage, I don't have to qualify you to make a payment, because you don't have to make a payment. So typically people can qualify when they're on fixed income for a reverse mortgage. And we also have to make sure that you have enough money to live on. We have to make sure you're not eating out of the back of the cabinet. We have to make sure you have enough money to take care of your house, maintain your house, make sure you don't have broken pipes. We have to make sure that you can pay your property taxes and your homeowner's insurance. I mean, these are all basic necessities that we hope everybody takes care of, at least our loved ones. The other obligation is that you have to live in the house, again, as a primary residence. As soon as you move out, then the loan becomes due and payable. So the safeguards for the reverse mortgage are, this is a non-recourse loan. What does that mean? That means if the balance of the loan ever goes higher than the value of the house, you or your heirs, when you move out, do not have to make up that difference. Also, there's counseling that's included with the reverse mortgage. You have to do independent counseling. The interest rates are capped, and also there's a full disclosure of costs. So we are regulated. You're not going down by the river to get a mortgage. There's different ways you can take money out of a reverse mortgage. So often I talk about who this product would work for when we have our infomercial. So you can take money out in different ways. You can get a monthly check for the rest of your life. You can get a check that is set up for a specified term. You can get a lump sum, you can get a line of credit, and you can get a combination of all of those together, and you can change it whenever you want. It is a very flexible vehicle. But remember, the best part is you don't have to make a payment. You can if you want, but you don't have to. So that is all that I wanted to talk about with regards to reverse mortgages. Now, who do you know that lives in their house that is scraping by? Maybe their husband has passed, they don't know how to do their finances, they don't know who to trust. They're sitting there and they're trying to go to the grocery store. They're trying to make their insurance premium payments that have just recently increased. They're worried about how they're going to care for themselves in the future. That would be a good referral for me because they want to stay in their house. Let's help them live their best life that they can with a reverse mortgage. Thank you very much.
Wow.